All right. Welcome back to Avery's Around the Desk podcast, where we dig into markets, companies, and different things shaping where the world is headed. Today is a post-mortem where we cover quickly post earnings some of the most critical companies in the markets. Earnings season is here. We're right in the thick of it. Some of our companies have reported here over the last couple days. Everything from Omnicell, which had a very strong report, to Mr. Car Wash, a new investment of ours, also had a very strong report. The market tended to like those reports. We just covered Meta in our past podcast, so go look at that or go listen to that. These will be brief, but today is Alphabet. It's Google. I will talk about that here. Their Q3 2025 results. I think the key framework here is this quarter was strong across the board. Growth accelerated, engagement improved, and AI continues to show up as a tailwind and less so as a threat. Revenue, to set this up, was up 15% in constant currency terms, accelerating from 13% last quarter. Really a clear sign that Google's core business is holding up just fine. To put some context around that, and just to show you some of the difference in terms of growth rates, Meta just reported 26% growth, nearly 2x that of Google. Yet people question the CAPEX spend. I think that's the wrong thing to do. I also think that's the wrong thing to do potentially for Google. I think these companies are primed to win in the AI era, and that is showing up for both of them. So go listen to that. Search for Google grew 15%. YouTube ads were up 15%. Cloud grew 34%. Probably the biggest number of the entire earnings report for Google was this: a backlog up 46% sequentially. That was it. I think that is ultimately the line item that people are connecting CAPEX to future demand and ultimately ROI. Paid clicks for Google up 7 versus 4 last quarter. Cost per clicks climbed 7%. Queries and commercial intent searches were both higher. So people aren't leaving Google. I think they're just searching more. It's part of our thesis with some of these, ChatGPT or search-like tools, which is I find myself querying and searching more, getting deeper, richer answers, which leads to more queries, to more questioning. I think anyone that is, in the world of trying to learn or trying to, ensure you're synthesizing information as best as possible finds themselves probably querying more, not less, maybe still using Google for certain things. And we'll talk about that here in a second. But, where the story gets interesting, I think, is despite these numbers, there's still this lingering question is, what happens when the way we search for information fundamentally changes. I said this on Bloomberg earlier today, and it was really about Meta, and I think it applies here too. Markets love anchoring to old stories. For Google, that story is AI will eat search, and I think it's fair to say that. If you look around, you look at companies like Perplexity, they launched their own browser in Comet. It's pretty cool. ChatGPT has Atlas. They just announced that. You look at someone like Atlassian in the enterprise. They bought the browser company, and they have the product Dia. And I think all of these players, everybody in theory, is trying to become an AI-first interface for information retrieval. Makes a lot of sense. It's probably the best use case of many of these things. So yes, look, if you're looking out 5 to 10 years, I think it's reasonable to assume the way we search will transform completely. I think the question, though, is does Google lose that future or do they adapt to it? And I think when we look at the Google's strategy, their AI strategy, this quarter simply says that they're adapting and doing so pretty aggressively. We know AI overviews, AI mode, Gemini app. They're embedding generative models across Search, Chrome, and Workspace. They obviously sell compute. They have their own TPUs, which competes against, other chip makers. And all of this seems to be working, at least for now. The Gemini app has 650 million monthly active users. That was a disclosure they gave this quarter, with 300 million of those paid. And that's adding roughly 250 million users in a pretty quick time frame. Queries through Gemini are up 3x quarter over quarter. So you're seeing massive adoption. And I think the proof that Google is here, they can distribute AI at scale faster than pretty much anyone. I think Meta, again, is that camp. I eventually think, AWS and, scale matters in the AI world. And I think Google is showing up. I think there's something about that 300 million paid subs and 650 million. You can still question that a little bit, just given the fact that, these are likely not net new users. ChatGPT, everything is net new versus, someone like, and even Perplexity and some of the other tools out there. So Google has an advantage. And the question is, do those numbers signal that they're capturing enough attention there? I would say so. I think they're still strategically in a pretty good spot. The interesting contrast, when I look at it here, is that Meta spending drew some pushback. Their CAPEX hit 70 to 72 billion, and that's going higher. So that seemed to spook investors. Google raised it to 91 to 93, so 20 billion more, and mentioned that they expect more in 2026, but the market rewarded them for that. And the question is why? I think from an investor's point of view is that Google's spend potentially looks more productive. They're not just building infrastructure for themselves, they're building also to sell. Their cloud business, again, is monetizing that investment with backlog up 46%. And, companies like Anthropic, one of the leading labs out there, committing to use Google's TPUs. So there's a clearer distinction between CAPEX to people buying AI-related tools, whether it's, again, the Gemini app with 300 million paid subs, to people buying compute and that accelerating. Now, again, not to make this Meta, because I have a whole conversation on Meta on the other podcast for 7 minutes, but Meta grew 26%, Google grew 15%. So again, you look at that, and it's hard to say that Meta, being the second fastest Mag 7 behind NVIDIA, isn't seeing benefits from AI of any sorts. Back to AI and Google, is those TPUs, they're purpose-built chips that compete indirectly to some degree with NVIDIA and AMD. There's kind of like a frenemy relationship with all of that. That gives Google, Alphabet leverage across both cost and performance. I think that matters a lot. They own the stack from the data centers to the models. They acquired DeepMind years ago, and they also have the consumer-related apps. So while Meta is spending, that's showing up in terms of like ad spend and stuff like that. It doesn't feel directionally connected, but in theory it is. And then Google spends to really monetize both internally and externally, and I think the market's trusting that. Again, if we zoom back, as AI interfaces multiply, does Google search bar eventually face this day of reckoning? My view is no. Our firm view is no. Again, not a recommendation, but we think Google is not having a day of reckoning. They're having a reinvention. We see that time and time again with some of the best companies in the world. Google's been AI first since it acquired DeepMind. They're still early. This is still an early endeavor, but it's happening pretty fast. Now, I think to conclude here is, the market's read on this is, revenue's accelerating, search, YouTube, and cloud are all outperforming, AI adoption growing, not necessarily cannibalizing. You look 5-7 years, I still think there's a question mark there in the eyes of investors, some buy-side firms that I talk to as well. CAPEX is rising, but seen as more strategic versus, some of its peers. And, regulatory still is an overhang. AI is still somewhat of an overhang on the consumer side. And ultimately, I think that is, what this is about. Google had a great quarter, and I think many of these hyperscalers are all going to have, good quarters. And that is it for this postmortem on Google. Good quarter, 46% backlog, I think is the story here.